75 cents is not a bad spot. You know, if we started going to 80 cents, we would start to see that impact Canadian cattle prices. So we would see our cattle prices would be negatively impacted by an 80-cent dollar.
Calgary-based analyst Brian Perrillat says 2018 was a fairly good year for the markets. He says prices were generally flat throughout the calendar year with less volatility.
A year ago, we were looking at more beef production, more meat production in general, which all came to fruition. But prices for the most part were pretty stable. Actually, if you look at calves, they're probably averaging in the over the entire year near 220, 225 a pound. So even through the fall run, calf prices still, for the most part, stayed over $2 a pound.
On finished animals, he saw those prices range from $1.40 to $1.65 a pound. He compares this to the summer low of 2016, which went down to $1.32.
So, the summer lows, were 10 cents a pound higher than 2016. So that was a positive sign, despite having, we processed 7% more cattle in Canada, and the prices were better.
The grain side and canola remain under pressure with the U.S.-China trade battle, with soybeans as the backdrop.
Soybeans really got hammered in the United States, so, that definitely impacted our canola market here. Just going to have more oil seeds, more soybean, big carryover of soybeans in the United States.
Canola is still over $10, averaging about $10 to $10.50. Perrillat sees opportunities for canola growers to lock in at about $11 for the summer. On the feed side, barley is still riding high. The price of corn is ticking up, with the Canadian dollar showing weakness below 80 cents.
Barley prices have been quite strong. So for guys who grew barley, they're seeing barley prices in the Lethbridge, over $5.50 a bushel, which is quite high. So it's not bad for guys selling barley, but for the guys feeding barley, which impacts cattle prices and stuff, those barley prices are getting pretty high.
Perrillat points to the volume of corn being imported, and with the Canadian dollar being weak and the cost of importing corn rising, barley is also following corn.
Maybe for the Canadian economy and stuff like that, we don't want the dollar, the weak dollar's not particularly good from a buying perspective. 80 cents isn't bad, but from a cattle market perspective, 75 cents is not a bad spot. Yeah, we don't want it too weak, but for cattle prices, a lower dollar is usually beneficial.
Demand for beef remains strong at about $2.6 billion in exports for 2018. Perrillat is optimistic about 2019.
We've actually seen extremely good beef demand, both Canadian, domestically, and internationally. It's looking like 2018 could be the third year in a row where we've actually seen Canadians eating more beef per capita.
There's concern on the pork side as China continues to battle with swine fever, and with the South American crop nearing harvest, concern remains on grain and oilseeds.
If some of these trade issues continue, or we see some global, and I guess back to demand again, if we do start to see China slow down, or the U.S., all these stock markets have been so volatile.
Gerard Lampow, Primetime Local News.